Hello everyone! Welcome to our presentation. Today we are from Group T. We will discuss a very interesting documentary titled Enron, the smartest guys in the room. The Enron case is one of the biggest corporate scandal in history. Our presentation will explain the main mistakes that made by the Enron's leaders, how accountants could have prevented the fraud, and the lesson we learned from the documentary. But before we start our presentation, let us introduce ourselves. My name is Andini Cahaya Pertiwi, and here are our members such as Nabilatun Nailah, Nabila Shadrina, Reva, Alfa, Syapa'a, and Rizka Febriasari. This presentation is part of our English class project, and we hope you guys enjoy learning with us. Now, let's hear from each of our group members who will explain these points in more details. Please listen carefully and feel free to take notes.
What were the main mistakes made by Enron's leaders? The primary mistake made by Enron's leaders, particularly CEO Jeff Skilling and Chairman Ken Lane, revolved around a catastrophic combination of unethical corporate culture and egregious financial manipulation. First, prioritizing image over substance, hubris, and greed. Enron's leader focused on appearing successful rather than being financially sound. The fundamental error was fostering a culture of toxic ambition where looking successful was far more important than actually being successful. They pursued growth at any cost, driven by a desperate need to meet or exceed Wall Street expectations. They created a toxic culture where employees were pressured to meet unrealistic goals. This culture was epitomized by the company's rank and yang performance review system, which pressured employees to produce impossible results. Second, abuse of mark-to-market accounting, recording speculative future profits as current income. Abuse of mark-to-market accounting, Skilling pioneered the use of mark-to-market accounting, a tool that, while legitimate in certain contexts, was grossly abused at Enron. This mistake allowed them to immediately book future, estimated, and often highly speculative profits from long-term contracts, like those in broadband or energy trading, as current income. Mis investors about true company performance. If the project failed or were delayed, those losses were simply hidden or subtle of the books.
Next, 3. Use of special purpose entities (SPEs). Enron's biggest mistake was the misuse of special purpose entities like LGM and Reva, managed by CEO Andy. These entities were used to hide losses and debt by keeping them off the company's balance sheet. This manipulation made Enron never financially strong while concealing billions in debt. 4. Lack of internal checks and balances. Enron's management created a culture that silent criticism was Bauer, Sharon Watkin, and others who raised concerns were ignored, showing a serious failure in internal control and corporate accountability. Thank you.
How could a concern have prevented this fraud? A concern, both internal to Enron and external auditor from Arthur Andersen, had used the opportunity to intervene and prevent the fraud. Yet, they failed due to a fundamental breakdown in professional ethics and independence. The first, exercising professional skepticism. The external auditor, Arthur Andersen, were obligated to maintain professional skepticism and rigorously challenge Enron's highly complex and unusual accounting treatments, especially the aggressive application of mark-to-market and the creation of the SPEs. Had they adhered to this core principle, they would have likely refused to certify the financial statements. The second, maintaining auditor independence. A major conflict of interest arose because Arthur Andersen was not only auditing Enron's books, but also providing highly lucrative consulting service. This blurred the lines and severely compromised their independence, making them less likely to challenge management for fear of losing valuable business contracts. Preventing this dual-role relationship is a crucial step in ensuring accountability.
Next, 3. Enforcing GAAP, Generally Accepted Accounting Principle. Internal and external accountants should have strictly enforced GAAP, the manipulation of the space and the use of questionable mark-to-market assumptions clearly violated the substance, if not the letter, of the principle intended to present and true and fair view of a company finance. A truly independent accountant would have insisted that the massive debt hidden in this space be consolidated onto Enron's main balance sheet. 4. Reporting ethical violations. Internal accountants, especially those with supervisory roles, had a responsibility to report material misstatements or illegal acts to Enron's audit committee and the SEC. Their failure to act decisively or their active participation in the fraud in some cases allowed the deceptions to continue for years, underscoring a deep ethical failure within the professions. Thank you.
The documentary Enron, The Smart Guys in the Room, served as a powerful cautionary tale about the devastating consequence of unchecked greed and corporate corruption. We learned that a company's success can be entirely speculative when leadership chooses to manipulate public perception instead of focusing on genuine, sustainable operation. Enron's executive engaged in truly egregious ethical lapses by using complex accounting schemes to misrepresent billions in debt and losses. This case highlights the critical importance of strong corporate governance, rigorous regulatory oversight, and the necessity of independent financial auditing to protect investors and ensure market integrity against such deceptive practices. The fall of Enron proves that complex financial engineering can ultimately mask fundamental financial flaws. Maybe that's all from us. Thank you for watching our video, and we hope this video helps you understand how important ethics, transparency, and accountability in business and accounting. If you have any question or thoughts about our presentation, please leave your comment below this video, and we would love to read all your opinion. Once again, thank you for attention and see you in the next discussion.